This is one of the largest telecommunication companies in Canada. This stock, I believe, has been getting beaten up quite a bit. Let me take a look at it now.
If I remember correctly, this is a stock that you owned and sold at around like 30?
At 34. Like right up here, right near the peak. I lucked out and I sold it up there. It has now come all the way down to $23. The dividend yield is 6.3%. So yeah, I mean it's really come down, but the company is projecting its cash flow and everything. So previously, I believe they announced 2.5 billion in cash flow for the next year, free cash flow, and they just dropped that down to 1.5 billion. Let me see if their most recent financials are here. Okay, unfortunately, we do not have their most recent financials that they just reported. Yeah, okay. But yeah, what was my conclusion on this one? Let's just take a look at their cash flow statement. So they generated $4.4 billion in operating cash flow in the trailing 12 months. They used 4.1 billion in capex, which means that they have $300 million of free cash flow left, something like that, 274 million left. Then you can see that they paid $1.2 billion of dividends. So if they have $274 million of free cash flow, how are they paying a $1.2 billion dividend? Well, the answer is they take on debt. So you can see here that the company, whenever they're in their capex cycles and they're increasing their capital expenditures to grow the business, they like to take on quite a significant amount of debt. 3 billion here, 2.4 billion there, 2.2 billion there. So my conclusion was basically when the company is in its higher capital expenditure cycle and it's investing in the business, I thought that they should just lower or cut the dividend rather than maintain it and leverage up the balance sheet. Because on top of them just paying the dividend, they were growing it as well. Let me see if I can find that. Yes. So they like to grow their dividend too. But they're paying this dividend over the past couple of years. They were paying this dividend with debt. So I think that I just don't love it. I understand that, it's a high capex business. It's kind of like a utility, but I just don't love it.
I hate that.
Yeah. Like they're going to grow their dividend with debt as they're investing in their business and leveraging up the balance sheet. And now they're projecting less free cash flow over the next year. So I kind of was just like, yeah.
Dan, do you want to laugh at us for a second here?
Sure.
The last stock we did, apparently the person, no ledge is real, came back and was like, whoops, I wrote the wrong ticker.
Yeah, there you go.
Sorry.
You can also see here the company's tangible book value has been declining and it's negative $12 billion now. That's because the company's taking on a lot of debt. Basically, at some point, I just think that this is going to have to stop. I don't think that they can just take on debt forever, and eventually the dividend will have to grow with organic cash flow. And I just don't know when that time is going to come. So there's just some things I don't love. I think that there's just better businesses out there.
Well, it seems like management is almost trying to keep the stock price propped up. A lot of investors will sell if they hear that the dividend's getting cut.
Exactly.
So the incentives are all a little messed up.
If you read my Twitter analysis that I did on Telus, I basically said I think the management is focusing on keeping the share price up rather than doing what's best for the business. Because doing what's best for the business would be, hey, we're entering a high capex cycle. We're going to cut the dividend so that we can keep the balance sheet healthy and pay for this organically. But no, they don't do that. They take on tens of billions of dollars in debt over the course of 5 years. So,
yeah, it's a no for me, Doug.
Yeah. Fair enough.
It doesn't make sense to me. So I got handed AT&T stock from my father, which had been owned for a while, and AT&T was a dividend aristocrat stock. Right before COVID in 2020, I actually sold off the entire position, which was pretty sizable when it got handed to me. And there were very similar things going on. I couldn't directly prove that they were taking out debt only to pay off the dividend, but their debt load was almost the size of their entire market cap. They had aging assets. The management had not made good acquisitions. And when you look at the exact same things you were just looking at there, Daniel, what is their free cash flow? What is the dividend payment? And very simple elementary math of can they afford this? I came to the conclusion where I said, I don't know how they can one, continue to pay the dividend as it is now, or two, continue to even grow the dividend when they're in that situation. And evidently they did end up cutting it around a year or so later. So these are things that you should definitely be looking into for dividend paying stocks.